Hey everyone, and welcome back to another penny stock video. And today we're going to be looking at a 000 stock that is just starting to kind of catch on with people, and I do think that it has a lot of upside from these levels. And I don't often cover 000 stocks because typically they all suck, but every once in a while you have a good one, and when you do have a good one, you can make quite a good return because of the nature of the price, right? When you have something that's 0.0004, all it has to do is go to 0.0008. That's a 100% return. If it breaks into double zeros, then you're looking at well over 100% return, right? So these can be very volatile, so you have to be cautious with them, but they can be huge gainers if you find the right ones, right? So with ABQQ, I do think we found kind of the right one here. I think this has the ingredients to make a really nice run, and we're going to go over why. They have a lot of pending catalysts coming that I want to take a look at, but we'll start with the basic fundamentals first, right? So this is their share structure. We always start with the share structure. You can see it's about 1.5 billion shares outstanding, and then our held at DTC, which is our free trading float, is 1.45 billion shares. Now, typically in the past, a lot of the stocks I've covered, I talk about tight share structures where they're small and they can create volatile moves that way. But when we're dealing with a 000, this actually is a small float, right? 1.45 billion shares is actually a small float. In the 000s, especially in the low 000s like this, I mean, you're looking at relative to other tickers at this price range. Many of them are 5 billion, 6 billion, 7 billion, even 20 billion I've seen, 20 billion share floats, right? So 1.45 billion is actually quite small for this price, and we can definitely work with that. So there's our first kind of fundamental to get out of the way. And now I do want to look at their financials real quick as well because, the financials are actually pretty darn good for a trip stock. I mean, usually when you look at a trip stock financials, it's just like ridden with liabilities. It's a total disaster. This one's actually quite solid, and it's SEC reporting and audited, which again is super rare for especially a low trip stock. I mean, so really nice fundamentals here to get started right off the bat, right? We have $3.3 million in assets, and again, these are audited financials. And then we're looking at about 1.7 million in total liabilities. So, that's actually quite a good ratio of assets to liabilities. And if you're concerned about 1.7 million in liabilities, you should go take a look at most other OTC stocks, and they have at least this, if not more. So that's actually quite low for liabilities for an OTC stock. Quite low. And then they actually have revenue. They have over $1 million in revenue. They're not profitable yet, but they will be acquiring a profitable company end of year. So we're going to be getting to that in just a moment. So right off the bat, again, very strong share structure for this price, and actually very strong financials for this price, as well as being audited SEC reporting, which is a very nice boost. So fundamentals look pretty darn solid for a TRIPS 4 stock, right? So why is this thing so low? Why is it down here? Let's provide a little context. There was some dilution going on, and we have a tweet out that they actually put out today from the company, from the company that clarifies the dilution a bit, because people had questions. Was the dilution coming from convertible debt? Is the dilution going to be infinite? How much are we looking at here? So they actually said, thanks for your questions. Right, the guy asked, can you provide an estimate on how many convertible preferred shares remain? And he said, if the price goes down, there will be more shares converted, right? Because there's a dollar quantity that's converting. So if the lower the price, the more shares it's going to add to the share structure. But they said estimated $150,000 in dilution, which is actually nothing. I mean, $150K in dilution, like 10 traders can buy that up pretty quickly, right? So really not a lot of dilution there at all. So how we treat finite dilution events like this, right? When there's a finite amount of dilution and the stock's at bottom, like super cheap already, can actually be a positive thing because it's a liquidity event, right? It's a circumstance where you can get a higher quantity of shares at a very cheap price that you would normally be paying a premium for if you wanted to get that many, right? Because if you look at a stock that's not diluting and it's really cheap, but then you want to get 30 million shares, well, there might not be that many shares available to purchase until the price is higher, right? So you can really take advantage of these finite dilution liquidity events that are happening at bottom. It's basically just like, hey guys, like here's free cheap shares, like gobble them up, right? So I actually like that they're transparent about this, and I think it presents a really good opportunity for people to get in so low on this stock. I mean, Trips 4 is just crazy, I think, for a company with all they have going on right now. And we're going to look at what they have going on right now in a second. This is just part of it. So before, we're actually going to come back to this preferred share conversion stuff in a moment as well. But let's get on with the catalysts, right? What are the pending catalysts that this stock has? What are the news events that we can look forward to that are going to take this to the next level? So there's quite a few of them. And you can see they do file 8Ks, right? And the first catalyst for this stock was they canceled their reverse split. So it had originally gone down quite a bit because there was a pending reverse split that was approved. Nobody likes a reverse split. It's not good for shareholders. So the company actually addressed this, and then on September 8th, they decided to cancel the reverse split. That's awesome. That's fantastic. That means now we can get back to trading this thing and properly value it, right? So with no reverse split, with that out of the way, that's very positive. So that was our first catalyst, happened September 8th. And that's what got me looking at this stock. And then on September 25th, this is huge. The sole officer and director, so essentially the CEO and owner of the company, Mr. Chuan Deng, he invested $1.5 million of working capital of his own money into this business. And the advance is non-interest bearing, due upon demand, but it's non-dilutive as well, right? So he's not getting any shares for it, and there's no interest on it. So he's literally just giving the company $1.5 million. That's a huge commitment from the CEO of what's essentially a startup company to be putting $1.5 million of his own money in and really not asking for anything in return, right? So that's a huge catalyst to me right there. And when I saw this, I was like, now I'm really interested. And then I took a look at more stuff they have going on. It turns out there's quite a bit. So here is, let me just check which one this is. Yes, this is our forward-looking catalyst. This is a big one. And this is a catalyst that is, I say forward-looking because it hasn't happened yet, but it's going to happen, and that means we can speculate on the impact that this will have on the stock price. So this is ABQQ announces it has signed a letter of intent to acquire All-in-One Media by cash. So first and foremost, right off the bat, I love that they're doing an all-cash acquisition. Again, this means there's not going to be any dilution, right? Because they're just spending cash for this company, which is something you really don't see often. It's something that means the company's serious, the company's committed, and it's something that means shareholders won't be diluted on. So there's really no downsides to this acquisition whatsoever, right? And so they're acquiring this NFT and metaverse company, All-in-One Media. And you can see, according to unaudited financial statements for the first 8 months in 2023, All-in-One Media Limited has generated about $6.2 million in sales with $1.18 million in net income. So when I said earlier we were looking at the financials and I said, well, they're not profitable yet, right? But when they acquire this company, it's going to bring in $1.18 million in net income. So not just profit, but net income, which is fantastic. Right, and then an additional $6.2 million in revenue. It also has $4.8 million in total assets and $4.5 million in shareholder equity. So this is a really strong acquisition. They have a website here, AIOblockchain.com, if you want to go check it out a little more. I believe the website's not completely developed yet, but this is a huge acquisition. They're doing huge sales with this acquisition. It's profitable, and it's non-dilutive. And so this acquisition is expected to close right here, completion before end of year. So it hasn't completed yet, but this is going to be a big press release that we can look forward to, a big catalyst for this company that we can look forward to coming before end of year. Now we also have this. ABQQ announced focusing to get the rights for the Eras Tour distribution release on theaters in Asia, right? So they're actually trying to get the exclusive licensing rights for the Eras Tour movie to distribute in Asian theaters. And so this company does actually have a movie theater in Asia, and they also have a movie theater in New York City. And I think they actually have a couple movie theaters in China. I could be wrong, but I think they have a couple of movie theaters in China, and then they have their premier movie theater in New York City as well. So they have physical movie theaters already, and they're trying to get the rights to bring the Eras Tour movie to China, which is obviously a massive market. And if they were to get in on this, I mean, that would be huge for this company, right? And then finally, we have, most recently on October 2nd, AB International Group, which is ABQQ, provides consulting services to ME Metaverse Inc., obtained valued $1 million in common stock for ME Metaverse. That service include the content creation management will continue evaluating potential of the client, right? And then it says here, ME Metaverse is a private company, may go public. We're continuing evaluating ABQQ, can be increased. The priority plan will be distributed those shares to AB's shareholders through special dividends. So excuse some of the grammar here because this is a Chinese company, so I believe they're struggling with English a little bit in this particular tweet, right? But what they're saying is basically the value of this $1 million in private equity that they have now in this metaverse company is going to be distributed to shareholders through special dividends. And as we know, special dividends will trigger a share count with FINRA, right? So that gets me into my next little theory with this stock. And keep in mind, it is a theory. You know, I'm not gonna scream like conspiracy, but basically, if you're familiar with the Kramers, they're on this stock, and we've talked about the Kramers in a past YouTube video I did with ASRE and how what they do is called death spiral financing, and so they'll give these companies loans or they'll purchase equity in these companies, right, and then they'll short the stocks based on the fact that they know they can cover the short position with share issuances that the company owes them from the debt, right? So very shady, it's very nefarious, it's very mean to shareholders, but you can also squeeze them like a normal short squeeze. So let me explain how, in theory, that would work with ABQQ, right? We're going to revisit this tweet where it says, if the price goes down, there will be more shares converted. Estimate $150,000 worth of dilution, right? Which is like 700 million shares, something like that, trips 2, okay? So, again, it's really not much dilution for the market to absorb, $150,000 in cash. But we have to remember that we have the Kramers here. And we have to remember that it's preferred shares that are being converted. And then we go to this 8K from September 13th, 2022, and we scroll down all the way. And this is an 8K about somebody who purchased Series C preferred shares in exchange for funding the company, right? And look who purchased the Series C preferred shares. Our good friend Kurt Kramer, who is a notorious death spiral financer in short. We've seen it on GTII. We saw it on DBMM. We saw it on ASRE. And in all three circumstances, there was a successful squeeze on him. So I'm thinking there could be a real theory here for a squeeze as well, because what's happening is if Kramer knows that the lower the price is when he's converting, the more shares he's going to get from the conversion, then he can short the stock down aggressively, betting on the fact that the lower it goes, the more shares he's going to get from the conversion that he can then use to cover that short. So what happens is if we can drive the price up, right? It's a 004 right now. But every time this ticks up, he's getting less shares he's going to be able to convert, right? So if it goes to 001, he has now like 5 times less shares than he would have been able to obtain through conversions at 0002. Okay, so what that means is he can get caught with his pants down here, because if he has a large short position here and he's banking on the fact that the price will stay suppressed and he can convert this to a full 750 million shares, then he'll be able to cover his short easily, right? But if the price goes up, then what you can see is he's going to get less shares. So if he's stuck in a position where, now I have no idea if he is or not, but I'm saying based on what he usually does on these stocks and the history with the squeezes on Kramer stocks, I'm saying if that is what he's doing here and suppressing the price in that manner, if we push the price up, or if the market does, I should say, because obviously we're just traders, but if the market as a whole decides, okay, we think this is valued higher and we can push this stock up, and let's say Kramer's short 500 million shares, but he can only get 100 million shares from his conversion because the price went up, guess what? Now he has to buy 400 million shares to cover his short, right? So that's how these death spiral financing squeezes can work. And it fits into this preferred share conversion idea, quite perfectly with ABQQ. So again, I cannot confirm that is what's happening because I don't have like dark pool data, right? But we can assume and kind of guesstimate that that's probably what's going on based on Kramer's history with how he does these deals. So knowing all that, I do think there's actually a somewhat of a good case to be made here for a short squeeze here to happen. And I do think it's kind of cool because it's a movie company, right? And AMC was a movie company that was highly shorted, and that squeezed really hard. So it's like OTC's like baby AMC in a way. So I do think it's a neat concept. It is a theory. We'll have to see if the theory is correct, but I do think there's some basis to it, and I hope I just explained it well enough that people can understand what I'm trying to say, right? So, that being said, we really do have a full pipeline of catalysts, right? We have the special dividends. We have the potential for a squeeze. We have the all-cash acquisition of a profitable company with millions in assets and $6 million in revenue. That's coming end of year. We have this Eras Tour licensing deal in Asia. I mean, so much happening with this company. Reverse split was canceled. CEO invested $1.5 million of his own money in the company just now. And they're very active on Twitter. They're updating all the time. They've done multiple press releases over the past month. They're working on AI stuff as well, right? So much good stuff going on here. I'm just like, I'm looking at it. I'm like, it's 0004. How could this be 0004? It looks far more appealing than half of the companies that are in dubs, right? I mean, it looks a lot more appealing to me on paper than like most companies that are trading higher than it. So that's why I like it. Obviously I have a position here. Someday I will sell that position for a return, right? That's the whole point of what we do. But I absolutely do think that there's a lot of potential upside here. If we look at the chart, this is the 1 year chart. You can see the stock price has been suppressed for quite a long time as well, which is another case to be made that there's a short here, because of how suppressed this has been, because they haven't been diluting that much. So for the stock to be like suppressed this much is just a little fishy, right? But then the main takeaway from the chart here, let's zoom in a bit to 9 months. We can see that our 52-week high is 0.00015, I believe. Yes, right here. Or maybe 0.002, actually. Let me take a look. This was, so 0.0002 about was our 52-week high. So there's actually quite a bit of room on the chart based on that, right? If we know that it did 0.0002 in November 2022 on basically the same share structure, very little has been diluted since then. Or maybe not very little, but there hasn't been like an insanely egregious dilution on it, right? I do think there's potential. There's a lot of room on the chart, is what I'm trying to say. So we have that 52-week high, 0.002. We have another high here from January of this year, where it did 0.0014, right? So Dubs 14. So from the price of TRIPS 4, it's already demonstrated multiple times that it can do higher than that, right? It actually just popped to TRIPS 6 like a week ago or 2 weeks ago. So it can certainly go further than TRIPS 4, and I think if it breaks that TRIPS 6 resistance, then we can see that it could push into dubs, which is obviously usually the goal for these TRIPS swings, is you want to get in low TRIPS and push them into, dubs range of 0.01, 0.02. So that provides a potential maybe even 5x from here, from these prices. A lot of upside, in my opinion. And it has to come off bottom eventually, right? So with all these catalysts that we have now, I think now is a very good time for it to come off bottom. And you can see by the chart that we're at bottom right now. So ABQQ, I think I've covered everything I can about this stock. You can follow me on Twitter, of course, at SuperRobotOTC. I'll be tweeting more DD as I find it. but very good opportunity here, I believe. That can be a really nice runner, especially when the $150,000 of remaining dilution is done. And since that was tweeted 2 days ago, we've already had a ton of volume. So it's probably a lot less than $150,000 of dilution left now. It's probably like half that, right? So we're pretty much almost done with dilution. It's coming off bottom. There's tons of catalysts. It's a nice one. It's SEC reporting. It's audited. It has good financials. Has a good share structure. Ticks every box for me. So definitely, do your own research. Not a financial advisor. In fact, I'm an idiot, as I always say, right? But point is, very, very nice setup here, I believe. Very nice setup, in my opinion. So thank you guys for watching, and I will see you guys probably this weekend with another video.